And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, and the show where we put you in front of where the action is in the markets. Of course, a lot of action and not at all positive, but there were some bright spots. We have lots that we are going to go ahead and cover, see if we can get our arms around this market, get a feel for where we are. Again, always with an eye for helping you get a framework together for next week and beyond. So let's take a look at our agenda. We are going to dive in, take a look, where are the markets currently, what we can be on the lookout for going forward. And then also, earnings season was in full swing this week. And of course, we did have an overriding headline relating to the rising number of COVID-19 cases, but earnings did still play a part. So I'm going to share with you some names that have reported, and they also would benefit from the potential increase or lengthening of lockdown periods. So we are seeing some themes emerging. I'll share those as well as individual stocks. COVID-19 testing and treatment plays. Now, of course, there are a number of companies out there who have developed tests, are in the process of developing vaccines. We're going to take a look at some of the better looking candidates among these two areas. And then also we are going to take a look at stocks that would benefit from a Biden victory. Just taking a look, I am not in any way political, but very simply the polls are pointing to a potential victory. So just want to get you in front of some areas of the market that would benefit, as well as individual stocks that are looking constructive at this point. So let's go ahead and get started. I did want to share and start with this particular chart. We are just to give you a sense of historical precedent. I have shared this in the past, at least a couple of times. What we are looking at here is a historical chart of the S&P 500, and this is just prior to the 2016 election, a daily chart of the S&P 500, just to share with you. Now, this going into this election, it certainly did not feel as contested and as certainly uncertain, but as always, we will get uncertainty going into these elections. This year we have an added additional uncertainty, certainly with the COVID, but let's take a look at 2016 just to give you a feel. While this week's action was certainly very negative, took us back to March of this year as far as the declines, but we can see in 2016 that the S&P did break down below this key red 50-day simple moving average, and it traded all the way down to this blue 200-day simple moving average before we saw this advance that did in fact go on to be quite lengthy. So let's take a look at where we are now, a current chart of the S&P 500, and I see if I can. No. Okay. So this is the S&P 500. As always, I'm going to share with you some of the simple moving averages. I'm trying to make the chart a little bit bigger, lost our stochastics. I want to get them back. Those are a faster momentum indicator that I always have down here at the bottom. But let's take a look. So we can see that the S&P 500 really had a tough week. It was down a little over 6% on the week. We did get some high volume characteristics. Those of you that subscribe to my MEM Edge report will know what we are on the prowl for as far as the number of distribution days that are clustered together and what that can indicate, because these higher volume days are really pointing out that institutions are exiting the market. So you do want to stay on top of that. And so we did have this rather decisive break this week below this red 50-day simple moving average. I pay a lot of attention to this, not only for the index, but for individual stocks as well. It's something that is very, very helpful as far as defining the broader markets and your stock. If you see this break below and it's on a pickup in volume, you can in fact see that it is something that will in fact come to pass, that more further downside may very well be in store for that particular stock, or in this case, the index. So the other item I wanted to point out to you is looking at this prior most recent low in the broader markets, taking us back to that mid-late September period. And from my work, that is that next area of support, 32.10. We did close today at 32.70. So we are still above that support. So we just want to have that, you want to have that in the back of your mind. But take a look, the RSI, MACD, stochastics are both trending downward and below their net neutral 50. So in negative standing. So at this juncture, the broader markets are not looking constructive. So let's go ahead and take this a bit further and take a look at some of these sectors within the broader markets. It's interesting and good to note that the broader markets, in this case, are unfortunately not looking very constructive, but here we want to take a look, drill down further, and see where the weakness may be residing and if there are any bright spots. So right here, we do have those 11 sectors as well as the S&P 500. I'm going to go ahead and put an RSI, that's that relative strength indicator, and sort it by descending. And the purpose here is on the upper left, we will be able to identify where potential all relative as far as strength, not only to the broader markets, but to the other sectors. So we can see residing up here, utility stocks, they were down almost half of the S&P 500. I'm going to be covering a couple of the more certainly positive looking areas within utility. And then we can see XLC. Now this is an area, I'm going to go ahead and blow this up because it's an area that I certainly focused on for a good part of this entire period as we came out of that bear market, a true leadership area, a lot of internet related stocks, companies that keep people entertained and connected as well. And we can see that it really never recovered from this September pullback. Actually, it was, we can see that more recently, it is this week relatively outperforming. And that's all about Google. They came out with numbers and the stock did very well, certainly today. So, and a couple of other internet related stocks in there, Pinterest, a lot of good news as far as advertising picking up. So the markets did like that. So as we move on, I did want to point out a couple of other areas that are looking relatively interesting. Financials, of course, they were down 5.5%, so in line with the markets. But just taking a look here, the last 2 days, certainly relative to the broader markets, a little bit of firming up here. So as we drill down further, I'm going to uncover where the little bit of strength was in that area. And then we can see as we move down here, unfortunately, technology really got walloped, down 6.4%. We can see a very decisive breakdown here below this 50-day simple moving average. And then we have these secondary indicators where this shorter term green 10-day simple moving average breaks down below longer term. And this is the 21 and the 50. And that's known as a death cross. And we can see that it's occurred in the past. Again, it is a more secondary indicator, but by and large, technology not looking very healthy here. So let's go ahead and drill down even further. We're going to take a look at some of the ETFs that represent significant areas of the market. Certainly from my work, I do traffic in high growth stocks for the most part, but I certainly have embraced the move into some of these other areas, whether it's industrial and elsewhere. I'm not solely in that area, but it is an area that you want to pay attention to at this juncture because high growth led us out of this bear market and actually out of the earlier year bear market. And when you see leadership names and areas start to falter, so too can go the markets. So that's another reason, certainly from my work and for you, that you'll want to stay on top of these growthy areas that very much got us out of that bear market. So take a look, unfortunately, up here in the forefront as far as where the relative outperformance volatility, it was up quite a bit this week. We did close at about 38, and that's a significant level. That is high. If we go ahead and draw our eye back over to the last time when it was significantly at that level, it's taking us back to that February, March, very chaotic period. Of course, we did get, I wouldn't call it a head fake. There were certain concerns here in early June as far as reopening concerns that spiked the VIX back up to this level that we are now. So we certainly do not want to see a continuation because this is also known as the fear index, and we can see back here relative what that in fact meant for the broader markets. So keeping a close eye there on that volatility. Let's take a look at another. Again, this is strength of underlying areas, all about relative. And this is the yield on the 10-year Treasury. Something that I noted last week and this week, even a bit, just a hair stronger for the week. But in other words, this is telling us that Treasury yields are increasing. So that is something that in turn will impact other groups. And we're going to get into that here as we move along because we talked about this in earlier financials. This is KRE, and that's the Regional Banking ETF. And you can see over the last 2 days, in fact, up 1.5% today. So this is not only that rising yield concept because banks do fare better in a higher interest rate environment, their profit margins are improved with lending and so forth, but also earnings. So we're going to get into some of these bank stocks that are holding up against the broader markets so that when those market pressures lift, we would anticipate a potential continuation rally. So let's go ahead and move on. Semiconductors, while this is not a pleasant looking chart, with a break below the 50 and your other indicators, certainly your relative RSI in negative territory, I will tell you, semiconductors did outperform. Again, it's all relative. They were down 4.8 compared to the NASDAQ, and the S&P down 6%. Just something to take note of because a lot of these semiconductors have already and are continuing to come in with very strong numbers. So we can just go ahead and move on from here. I did want to share with you, unfortunately, because these are software stocks, IGV, tech software ETF, and another big leader out of that bear market faltered here with that September pullback and was really close to approaching those prior highs before the last 2 weeks, where we have seen just a slow erosion and deterioration. Microsoft, big bellwether name in here, down 6.4% for the week. They did report earnings this week, and their guidance going forward was light. So that is not what you want to see or certainly hear as far as the broader markets. I'm going to take a quick break here. We have lots more to cover, and we will be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I just wanted to very quickly share a piece that MarketWatch did earlier today. And it is an article of, actually, I'm sharing with you this table that goes back to 1944. And it talks about the broader market performance from July 31st to August 31st. There was a study that was done, and when there was a negative performance for the broader markets during that 4-month period, and that's indicated here by these negative. The president that was in place during that July to October period has never historically been re-elected. Just another side note, so we can see certainly going into earlier this week, we are down 0.5%. So history would tell us that potentially, just an anecdote to keep in mind. So I'm going to share with you, take us right into those areas of the market that would benefit should we see Biden make it to the White House. One of the areas that has been talked about quite a bit is this alternative energy. Biden has talked about a $2 trillion package that he, over a 10-year period, hopes to lay out. So one of the first names we're looking at here is BEP, Brookfield Renewable Partners. I will tell you it's an LP, so it's going to be treated differently for tax purposes if you're looking for an investment. But this particular company does have green energy properties, wind, solar, and also offers a 3.8% yield. But let's take a look. The stock is really holding in remarkably well. We can see, despite a very difficult broader market, the RSI has retained and stayed up here above that net neutral 50, and the stochastics are up above 50 and trending upward. So this certainly would be a stock that you may want to consider, put on your radar. Another one, this is a utility stock. NextEra, a company I'm very familiar with. I'm going to go ahead and share with you a weekly chart because this was a big winner for my MEM Edge subscribers back here for almost a 2-year period. This stock, and this is all about alternative energy, one of the few really almost pure plays. They're the world's largest producer of wind and solar energy, Florida based. Big community there that is taking advantage of that. So let's go back to that daily price chart and take a look. NEE also offers, they have a 7.4% nice yield, but we can see that the stock did get caught in the downdraft for this week. The RSI is just dipping below that net neutral, but I will say relatively it has held in well. You want to see it hold support here at that 50-day. Again, names to go ahead and put on your radar screen. The next stock is FSLR. This is First Solar, and the stock did come out with earnings this week. Take a look at this gap up here. As the name implies, they're a US-based solar product provider. And the stock did have, again, earlier in this week, that gap up on earnings. Their earnings and revenues did come in surprisingly well. They did beat estimates. We're seeing a lot in the way of customization, people really fixing up their homes, and certainly solar would be one way to improve your energy efficiency. So taking a look at the stock subsequent to that gap up, it did dip below this 10-day simple moving average, but take a look. It closed the week in the upper portion of its trading range on the week on very big volume. This gap up was on big volume, so that bodes very well. The RSI and MACD are positive for this stock. I'm going to shift to another area, and it's something I've talked about in the past, and that is some of these marijuana stocks that are setting up. Biden is expected, again, all speculative if he were to make it to the presidency. He does have, and his administration is expected to have a softer view and likely to support the legalization. This is Canopy Growth CGC. Daily price chart, again, holds in remarkably well. RSI is positive, as is that MACD. I'm going to take another little switch here, move over to another area that's would benefit, and that is infrastructure stocks. Certainly, Martin Marietta is a name that we can consider. MLM is the ticker symbol. The stock does a lot in the way of paving, crushed stone, and so forth. And they did come out with numbers yesterday, and take a look. Very good. They came in above estimates. The stock gapped up above both of these shorter term simple moving averages. MACD and RSI are both in positive territory. So that this stock does not look similar to many other names out there that really got hit this week. One other infrastructure stock, ROAD. This is a smaller company. It's 1 billion in market cap. This big advance here is the company's most recent early August earnings release. Pulled back from that. You can see it's a bit volatile, but certainly worth consideration. And then for those of you, you can drill down further into these heavy construction stocks that could potentially benefit with spending on infrastructure on the horizon that may be increasing. Let's go ahead and move on. I talked about the concept of stocks that have reported strong earnings, and then also, and primarily because of COVID-19 and the lockdown. So the concept is that these stocks would continue to benefit. So I'd like to call this a theme within earnings, because by and large it's been rather dicey. A lot of those large FANG stocks coming in with numbers that were decent, but the market's just not pleased. So I'm going to go ahead and turn things around and share some other areas that really came in with surprisingly strong numbers and could potentially continue to benefit. This is HOG Harley Davidson, and I'm pointing it out because on Tuesday, the stock broke out of this base, gapped up, and the company had 50% year-over-year earnings, 275% above estimates. And so a couple of factors at play here, in addition to people wanting to hit the road on a motorcycle. Also, the company did a lot in the way of cost cutting, and it's really finally taking off. So that's rather bullish, but again, a play on the concept that people want their toys. They're not going on vacation, but they do want to get out and not stay locked in their homes. This is HZO Marine Max, and we can see that this stock is poised to break out of a longer base. Big winner out of the bear market, has everything to do. They are a specialty retailer of boats. A lot of these boat distributors are seeing sales really skyrocket. It's amazing. And we did see earlier earnings such as here, but even this past week on Wednesday, HZO reported 213% year-over-year earnings growth, 120% above estimates, and they guided higher into 2021, well above estimates. So again, we're seeing this theme, people wanting to be outdoors, and actually the concept of being guiding higher going into the future. Now this one, for those of you on the East Coast, I understand there was snow in Boston and elsewhere. You might scoff at the concept. It's pool, P-O-O-L. But this was another one where people are improving their homes. Maybe they'll turn it into an ice skating rink in the winter. But what I did want to point out to you here is on October 22nd, take a look right here. Actually, no, it would have been further down the road, but they did come out with earnings, 47% year-over-year earnings growth, 25% above estimates. So hanging in, again, all relative. Take a look at the broader markets, and you wouldn't know that there was a lot in the way of positive, constructive action in some areas. This is Garmin, G-R-M-N, another one that came out with earnings, and this is all about wearable fitness products, cycling products. Again, those people that want to be outdoors, they want to use this time to stay fit. And the company did also come out with earnings, and we can see this nice pick up here in response. Take a look at the volume, really good numbers. The other area that they are in is marine navigation. So it ties back to that HZO, this concept that more individuals are purchasing boats and they need these navigation systems. So GRMN, nice volume, RSI, MACD in constructive territory. Just one other name that we can take a quick look at that has been a winner, but it is going to provide you just a little bit of a yield. But this is Sherwin-Williams, SHW, holding in really quite well. Just a nice back and fill tight consolidation period. I'd like to see this MACD turn positive up above that net neutral 50 with real volume to indicate a potential another leg up. But these guys also recently came out with earnings 25% in the way of year-over-year growth. I could go on. There are other names, but I don't want to miss out on sharing with you some of those COVID plays, for lack of a better word. These are companies that have either come out with testing kits or they are poised to, let's see, QDEL. This guy, they came out with earnings this week and they were 730% year-over-year earnings growth. These guys have a number of tests that have come to market. They're certainly most popular more recently is a 15-minute in-office test that you can take part of as far as being tested for COVID. So I did want to point this stock out to you. They did also report this week, very good numbers. PKI, that's another company that came out. They, in March, were approved for a test. And take a look at the action this week. Very bullish. RSI, MACD, quite positive. HOLX is another company. They have two different tests that are out there in market. Take a look, very strong, nice uptrend here. So these are companies, given the fact that COVID-19 unfortunately is continuing to spread, that we do see this testing unfortunately will be mandated for some time going forward. Down here, DHR, they have a number of really great tests in place, but they also have a life sciences division that is finding demand. They work with companies that are working on vaccines. So this is kind of a double play, if you will. A little bit extended. I was hoping that it would pull back further, but not so. Really, you can see that relative outperformance with that particular stock. And one other area that I wanted to very briefly mention is that there are a number of companies that are due to report next week that I would urge you to keep an eye on. This is Trade Desk, a big winner. And then when you talk about advertising being increased, certainly at Google, Facebook as well. But so you're going to want to watch. This is an ad agency platform. We also are going to want to take a look at Wayfair, because that had been a big winner and they're due to report their earnings. So people certainly are still spending. Haverty came out with their numbers this week, and take a look at the gap up. So we're going to be on the prowl, see what Wayfair has in store. CRM, a bellwether software stock that has deteriorated. So keep an eye on this particular stock, because similar to Microsoft, their results will in fact have an impact on the broader markets. One last name we can take a look at that is due to report next week. This is Alibaba, China-focused retailer. China, of course, is ahead of us as far as the recovery, so we're going to keep an eye on this as well. I'm going to leave it at that. Those of you that want to be kept on top of where the broader markets are, and as well where we anticipate the broader markets to head, go ahead and take a look at my MEM Edge report, and you will be alerted not only to the markets and our sentiment, also taking a look at individual stocks and what you may want to do as far as your holdings and sharing with that. But I do have one other stock. I have a couple of other names that I did want to share with you that have reported earnings. And this is taking us back to that lockdown play. This is Boston Beer, SAM. Take a look, gap up. So we can see restaurants are closed. So people are, in fact, purchasing retail. They're seeing a nice boost, certainly in their beverages, their carbonated spiked carbonated beverage. But again, what I wanted to point out here is this gap up on huge volume. And what is forming here is a high tight flag formation. Of course, you want to have that broader market backdrop behind you before getting too involved in a lot of these stocks. But we can also take a look at LZB, another home improvement related stock that did report earnings. This is Lazy Boy, and keep this one on your radar, looking constructive. We're going to leave it at that. Have a great weekend, everyone, and I will see you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.